Hello and welcome back to Dukascopy TV. Today I'm joined down the line by Phil Carr, head trader from Gold and Silver Club, to discuss his outlook on these precious metals. Phil, it's great to speak to you. So first of all, how are gold and silver performing at present? Do you still consider these commodities a safe investment bet ahead of paper currencies, for example?
Right, well, that's actually a great question. I mean, in the last 60 days, we've seen a 9.96% increase in gold alone, and silver has had a 21% increase in the last 60 days. So we've actually seen, we saw during the summer months, the prices were very much range bound, especially on gold. We were stuck between $1,520 an ounce to $1,640. We finally broke out of that to the upside at the end of August, and this breakout has really signaled the start of gold's recent rally. So the sort of percentages we've seen have come about since the end of August, and these have been sparked a lot by FOMC announcements and much more recently the announcement of QE3, and the markets reacted by gold rocketing to a 7-month high. So, and that was up to $1,775 an ounce. So do I think they're going to be treated as a safe haven at the moment? So at the moment they are being treated as that, and as we've seen more paper money come into the markets, we are seeing that correlated to gold and silver prices moving up quite significantly.
At 11%, gold posted the biggest quarterly gain in 2 years. However, gold dropped after the first 2 sessions of this trading week as investors are poised for influential meetings held by European ministers. How do you think these events will affect the gold price subsequently?
Yeah, that's another great question. I mean, just looking at the gold prices today, we are seeing the euro did actually take a little bit of a drop this morning on speculation of meeting. We had the European ECB speaking this morning at 8:30 UK time. We saw the euro come down ever so slightly in the morning, well, quite quickly, but only for a very limited time frame, and it's bounced back up again. We didn't see such an exaggerated move on gold and silver, actually. And what we have started to see since mid-September is where the euro has had larger moves to the downside, gold and silver are really holding that 1770 level at the moment. And as with before we had Operation Twist in 2011, the gold and silver prices were actually correlated to the US dollar. In terms of when the US dollar was rallying, gold and silver were rallying as well, until we had Operation Twist. So at the moment, the euro isn't having as big an impact on gold and silver as it used to have pre-QE3. So even if we do see a lot of negative news or negative sentiment coming out of Europe later on in the week, we may see temporary pullbacks on the metals, but I do think those will be seen as further buying opportunities at the moment, unless we break key levels within gold and silver. So although I do think there may be some short-term pullbacks, I don't think it's going to have a strong effect on gold and silver. I believe they will hold their ground.
Do you think the recent QE3 announcements will have a continued impact on gold and silver in the short, mid and long term? Some analysts are predicting $2,000 an ounce for gold by the end of the year, for example. But do you see this uptrend continuing?
Yeah, I mean, that's a great question. In terms of what we've seen so far with QE3, we have certainly seen this is really seen an end really to a year-long correction on the metals. So we're now almost back. I mean, on last Thursday we touched the highs of 2012, was the highest price of gold since November 2011. So with the QE3 being announced at the moment, we are starting to see an aggressive rally with gold. So on a short-term basis, we do think gold is looking attractive. We could potentially see some near-term consolidation continue, but over the mid-term, over the longer term, we do feel that these all-time highs are going to be hit. I know certainly the open interest in the last quarter of the month, there is a lot of open contracts, open interest looking at between the prices of $1,800 per ounce and $2,500. We are think we are looking at prices, I would say, in the final quarter to break certainly above 1,800, and I do think QE3 is going to push the gold and silver prices higher. I mean, silver at the moment, we've tested that $35 an ounce level several times now. We've got as high as about 35. I believe we're going to be looking at in the final quarter, if we can get above 35, we're going to be looking to get into around $37 per ounce. And if we can break above $37 an ounce, I think you're going to start to see a lot of additional traders and investors get into this market, and we'll see the price being pushed above 40. So I do think QE3 is going to see gold and silver prices higher in the final quarter of the year, possibly even retesting, yes, $2,000 an ounce. If we can break through 1,800, get past the $1,920 high, all-time high, I think it's achievable to hit those levels.
India and China now represent two of the fastest growing markets for gold and silver. But what do you think will have the biggest influence moving forward?
Yeah, absolutely. I mean, if you have a look at actually China in particular, China is the biggest consumer of silver on the planet at the moment. So they account for over 23% of global silver consumption last year was through China. And in 2010, silver demand actually rose by 67%. India and China do have a huge appetite for gold and silver, and we are seeing that effect on the markets. We will certainly see that on a daily trading basis, where you will tend to see higher prices over those time zones, the Asia Pacific time zones. So we do believe that will have some impact on the prices of gold and silver moving forward. And we do believe that the quantitative easing program, which is now taken into effect, is going to see the prices increase now. So we're looking going into the last quarter of the year, typically a bullish season for gold and silver anyway, particularly with the gold festival upon us. We see this as being a bullish season, and we would be looking at prices pullbacks as potential buying opportunities at the moment, unless we had outside markets causing bearish, any sort of bearish sentiment, but otherwise we're looking at pullbacks as buying opportunities.
Phil, I really appreciate your time and insights today. Thank you once again. Sadly, that's all we have time for at the moment, but the Dukascopy TV team will be keeping a close eye on how commodities fare in the coming weeks, so do stay tuned. Bye for now.